You are listening to chartingwealth.com for Wednesday, the 16th of May, 2018. The book is going out every day. Thank you so much for all of you who've been ordering the book, Charting Your Way to Wealth. We're autographing each copy for you, sending a little note thanking you for it, and we so appreciate your support. It is really the first thing that we've done here besides our trader journals to actually raise money to help us pay for all the expenses related to our channel, and we so appreciate all of your support. If you want to help us, please go to the website. You will see under each daily market review a link where you can go online and order our book. It's also attached to the show notes at our Charting Wealth YouTube channel and all the emails that go out. If you're not a subscriber, you need to be one. You can sign up to be a subscriber for free. And in the email you get every day that includes the video, there's also a link in there where you can order the book. And you can also order the trader journals. Each one of those is good for 3 months. It has a daily market worksheet for every day of the week, except of course Monday, that's when you use the weekly market worksheet and loads of trade worksheets so you can keep up with your trades. These become basically, these trader journals stack up month after month, year after year, and they become your real trading almanac. They have everything in there you need that you've learned over the years, and it is the way, if you want to supercharge your training, then of course you need the book, Charting Your Way to Wealth, so you understand the theories, you understand the Bollinger Bands, why we use those, why we use the derivative oscillator, the price percent oscillator, how we use the exponential and the simple moving averages, how we use the Heikin Ashi candlesticks. All that stuff is covered, plus our two primary trading methods. It's simple and direct. It is not a lot of wasted space. Every word in there we hone down to give you just what you need. It is a book of meat. There is not a lot of fat there. We want you to use your time wisely. That's enough selling. God bless you. Thank you all for your support. Let's jump into this market. Everything down for the day. We see on the S&P 500, it was down 0.69%. Now, so far, the weekly candle, and remember, these are Heikin Ashi candlesticks, and the reason we like them so much, we've got a great training. I think 70-something thousand people have viewed it at our YouTube channel alone, in addition to the website, in addition to everybody that's listened to it. But what you will find is Heikin Ashi candlesticks, that means average pace in Japanese. And what, of course, it means is that we're tracking the average pace of price movement. And what we see going on is we see that even though it was a down day on Tuesday, 0.69% had been an up day on Monday, we still see the average pace heading up as far as price movement. When we look at the derivative oscillator, it's continuing to lose downward momentum. Looks like it's getting close to crossing over. Maybe by the end of the week it will. Remember, a 5-day candle is 5 days. We're just 2 days into that. We're just 2/5 through the week. So we'll see how things continue to move. We may have a crossover going up. We may not. If we do, then that can, of course, set us up for an up trade. That means that there's enough power, enough up movement to actually switch over the weekly trend, which has been heading down since the 9th of February. That's a long time back. But again, we are going into what appears to be the second week of up movement. We'll see if there's a crossover at the end of the week. As we look a little closer, we see on that 2-day chart that it crossed over back on the 16th of April. Some sideways sliding and up movement, and so far the first day of this latest 2-day candle is a bit of a pullback, not nearly the kind of up movement we saw in those last 3 2-day candles, so 6 days of up movement. But again, price movement still above the 2-day trend line. We'll keep our eye on things. Remember, all things being equal, the market does tend to move in the direction of the largest chart. That's the weekly chart. Currently, that's down. We'll just continue to watch. Now, what did we tell you to watch for? We're wondering if things were topping on the S&P. They seem to have done so, at least in the short term, down in the morning and in the afternoon on Tuesday, the 15th. And of course, The price percent oscillator headed down, derivative oscillator losing momentum. So we'll continue to keep our eye on things on the S&P 500 and just see when a trade makes itself available. Remember, we have to have the 2-day and the weekly moving in the same direction, and they currently are not. Now on to the Qs. It was down quite a bit more than the S&P 500. That's the NASDAQ 100 is what the Qs is. It's down 1.11%. Again, still a green up candle in our Heikin Ashi weekly candlesticks. And we do see the price percent oscillator continuing to head toward the red signal line, derivative oscillator losing upward momentum. We look at the 2-day chart. It crossed over going up back on the 4th, Friday the 4th of May. And of course, we had 4 up candles. What have we had happen so far? And again, it could change if it's a big up day on Wednesday, but so far, the first day of the latest 2-day candle is almost a doji, means lots of indecision tending down. Remember, price movement hasn't crossed through the 2-day trend line, but it's laying very close to it. Derivative oscillator still heading up, price percent oscillator still heading up, but it's lost some of that surge. As we look at the 4-hour chart, what do we see? Well, of course, we see that 4-hour chart rotating over, going down. In fact, it did that in the afternoon. Now, it is significant when we see the derivative oscillator and the price percent oscillator both cross over going down at the same time. It did so, not enough to breach the 2-day trend line. More alarm bells would be going off. But when we see the derivative oscillator and the price percent oscillator conjoin in flipping over or going in the opposite direction, that tells us something. We also see solid red boxes, which mean solid down moves on our Heikin Ashi candlesticks. So we'll keep our eye on things when it comes to the Qs. Now again, remember, we've got the weekly up, the 2-day down. If we do see a crossover going down in that 2-day back in the same direction as the weekly, we might have a down trade. If the week ends up continuing to, well, move up as the candle currently is, then we might have a flip over going up on the weekly in the same direction. But we want to have the 2-day and the weekly in the same direction before we try to do any accurate trend following, which is what we do. Now on to TLT, that's 20-year bonds. Now remember, the weekly has been in an up move since it crossed over going up back on the 29th. There's been a considerable amount of down movement since it topped out back on the week ending. And when I said the 29th, I meant the 29th of March. It went on up the following week through the 6th of April, but since then has been sliding sideways down through about the 27th of April, and then sideways the next 2 weeks, and so far this week moving down. It looks like we might end the week with a crossover going down, but my friends, we have seen this before on TLT, haven't we? We saw it back on the 20th, the week ending then, well, during that week, but then it popped up toward the end of the week and didn't cross over going down. Same on the 27th, week ending then, the 4th of May, and then the 11th. It just didn't quite make it. Looks like it's going to cross over going down now. The derivative oscillators really gaining downward momentum, so we might see a switch over going down. If we do, it'll be in the same direction as the 2-day chart. How's it doing? Well, of course, it crossed over going down back on the 20th, went down for 6 days, and then sideways up until this latest down move. Price movement is below the 2-day trend line, so we'll keep our eye on things. Price percent oscillator really spiked down, and the derivative oscillator gaining downward momentum. As we look at that 4-hour chart, we saw where it crossed over big time going down in a pullback in the morning on the Tuesday the 15th, and then more down movement in the afternoon, really building strong on that derivative oscillator. So we'll continue to watch and see if things develop and give us a trade in either direction, particularly in the down direction on TLT over the course of this next week. But again, we have to have that weekly candle close before we can call it. Now we get to a trade we told you might be shaping up, and it appears to have happened. Hope you were paying attention as we ask you to be sure that you did so. Of course, the weekly's in a confirmed down move on the weekly chart, crossed over going down on the weekly all the way back on the 16th of March, and then sort of tracked up slowly with some down weeks, but tracked up and then started powering down starting on the 27th of April, the week ending then, followed by 4th of May, then a bit of an up week for the week ending the 11th of May, but again, not enough upward pressure to pierce the weekly trend line, and what we've seen happen so far this week is a down week, big long candle so far on that Heiken Ashi candlestick at the bottom, a little one on top. Solid red down candle. We look at the 2-day chart. Remember, it's confirmed down, has been since the 24th of April. Moved down for 8 days and then sideways, tending up a little bit for another 8 days. And of course, so far, first day of this latest 2-day candle down. Now, we told you to watch for what? Well, if you look at the 4-hour chart, we had the telltale pullback starting in the morning on Friday, May the 5th. And of course, it did pull back, and we ask you to pay attention as the derivative oscillator started losing upward momentum and heading down. And of course, we saw a down move in the morning, and then in the afternoon on Monday, not enough to cross over going down, but that did happen. Those bells went off in the morning, and of course the jumping in time was after the close of the morning candle, sometime in the early afternoon, around noon or a little later. And of course we've seen continued down movement in the afternoon, derivative oscillator gaining lots of downward momentum. And the nice thing that we saw is that the price percent oscillator and the derivative oscillator both crossed over at the same time, typically a good sign for continued movement. Hopefully this 4-hour chart isn't going to fail us. It started getting more reliable back there at the end of, well, about mid-April. So we're hopeful that it's going to be something we can rely on. That coupled with the weekly and the 2-day in confirmed down moves. Hope you jumped in on this trend following trade. We will, and hopefully you did that in a virtual trade that was shorting gold, and we will just see how well it works, my friends. Remember, this is the toughest time of the year to trade. Why is that? Because we're in the summer doldrums. Sell in May and go away is an old market adage. Why? Because a lot of the volume leaves the market as traders take time off. Big money gets out of the market in the summertime, and it is just historic. That happens again and again and again. And when there's not a lot of volume, you know, it's like you've got a little bathtub, and it doesn't take a whole lot of moving around to make things go back and forth instead of having a big ocean. So again, keep your eye on things. Continue to practice. We want to continue to practice, particularly during the tough times. If you can do it during the hard times, during the summer doldrums, then when the fat time of year comes in the fall-winter trading zone, man, you are going to be supercharged and ready. You got to practice every day. It's one of our rules. Every day, 10 minutes. That's all we ask. Fill out those daily market worksheets, weekly market worksheets. Buy the book, Charting Your Way to Wealth, and the Trader Journals. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.